Robschild, no investment advice. Today is Monday, December 30th, 2024. I will not be doing a macro Monday because nothing's really changed. Look back to the one titled Friday the 13th, the one with the ball and a tornado, to see my macro full views. Today's episode begins discussing the Chicago business PMI coming out. Still dropping from a previous trend as shown in Market Watch, and if we look at a historical view of this, I'll try to make this full screen. I'm not sure if you'll see it or not. This right here where my mouse is says 51. When it's below 50, it means we're in a contractionary phase. When it's above 50, it means we're expanding. And as you can see, whenever we're significantly below the 50 mark, I mean 1974, recession, 1980, recession, the big dips here, the dot-com bust, major recession, the great financial crisis, recession, the COVID dip, which briefly dipped down all the way down to 32. You know, since October of 2022, we have been, for most of the time, below 50. And more recently, since September of 2024, we went from 46.6, trending down to even a lower low of 36.9. Now, you know, if this isn't going into a recession, then I don't know what would be going into a recession. It's just another one of the many indicators showing an imminent slowdown. If this current trend of just dropping straight down continues, it would be highly unusual to not have obvious recessionary, you know, everyone losing their jobs kind of slowdown. Next on the agenda, if you're a subscriber, you may have noticed my community post today, maybe not. I opened a short on Bitcoin in the fund BITI at the price of $24.24. As of the recording of this video, the UTC time, we have 11 minutes left on the clock for today's candle. And today's candle, it looks like we are closing below these two trend lines that I have here, both representing what can be seen as a head and shoulders top. You know, ideally we want to see it close below this blue line here, the flat line, to give it even more strength, but I am bearish on Bitcoin now. You know, the fact that we're in the middle of the Santa Claus rally and we're seeing some volatility spikes already, it's kind of like you know, shots fired kind of a thing. And if I'm expecting it to drop down to the 75,000 level imminently. This is based on the fact that it looks like we are closing below these two trend lines, and we had this wick piercing this previous, it's a head and shoulders top. You can see it, shoulder, head, shoulder, pretty easy to see. Next on the agenda, markets are obviously closed on Wednesday for the new year. And then last thing on the agenda, the Santa Claus rally, or valley as we might end up calling it, ends officially on Thursday, you know, but the fact that it's a Thursday says to me that most of the traders are probably going to bridge the weekend, and we're not going to really see serious volume coming into the markets until the following Monday. As it stands, it's looking more like it's going to be a valley, not so much a rally. If you saw my community posts and Friday's show, I mentioned it was a good time to get out on Thursday, and that's looking more and more true. Nothing has changed in the daily reminders. Watch the show titled Friday the 13th with a tornado in the ball to hear me read through these extremely important things to know about. This is my current overall macro view of what's going on in markets. Along with no changes in the daily reminders, there's no changes in the crystal ball readings, nor any significant changes in my portfolio, which I also explain on Monday's show, or the the most previous Monday macro show. On to the charts. We start with the SPX, the S&P 500. Now, I don't think I noticed this before, but this is head and shoulders right here. Pretty nasty one with this large, formidable candle on Wednesday. This is looking like it may turn out to be the actual top. Very notably, the very high of the highest day of this of the S&P 500. If you can see it very small on the screen, 6099.997. This is amazing. If you happen to follow Verified Investing with Gareth Soloway, with his very good chart pattern, trend line drawings, if you connect the 1929 bubble peak to the dot-com bubble peak, 6100 is the number. And so obviously, him and pretty much every other professional trader out there, they weren't willing to get that extra 3 cents in. We didn't actually hit the 6100 level, but I'll say that's close enough. I mean, who's the guy buying it? I'm just trying to figure out who the guy is that's buying at what is it, $69.96 to get it to 97 cents. I mean, crazy. And then that was the top. It's unreal to think about the kind of stress that professional traders go through in trying to chase momentum around. Moving on, I wanted to point out DXY continuing to tighten up in this bull flag here, obviously itching to break assumably to the upside. I don't have my crystal ball with me, so I can't tell you for sure if it's going to break out to the upside or downside. But the probability is that just on the chart pattern alone says we're breaking higher, and that can cause a lot of turbulence in world markets. Next, we have the VIX continuing to trend higher from Friday's spike. We had an open close higher than yesterday's open and close, and spike even higher. So volatility increasing any way that you look at it. Next chart I wanted to look at is the U.S. Treasury's yield curve. Notably, it looks like the 1 year has been dropping. This is a little bit on the back of the probabilities today. All of a sudden, we had one cut priced in for all of 2025, and all of a sudden, I think it was today, we flipped on the very end of this. Again, you have to take, the further out you go on these contracts, the less weight you need to give them. But for the October contract, we're looking at 2 cuts, and then 1, 2, 3, 4, 5 cuts. All of a sudden an emergency cut for December 2025. Again, this has to be taken with a huge grain of salt. But I think it helped push the 1 year notably lower below a lot of the rest of the curve. Next chart, TNX, the 10-year Treasury yield, a good place to look to see where Treasury bond yields may be going. I don't really know what's stopping us here on this chart. It kind of just stopped going up, didn't hit any of the millions of lines that I've been drawing. Looks like we're curling over a little bit here to the downside. If markets fall apart, it looks like this might be a top in markets, and if volatility increases, stocks go down. When stocks are clearly in a bear market, that's when long duration treasuries tend to get a decent bid, and so maybe we are at the bottom of the value of TLT and the peak of longer yields for a while. Maybe, I'm not really completely sure, but I think we might be there. Next chart that caught my eye, Dr. Copper with a PhD in economics. This is the price of copper is a great leading indicator. It shows, it's used for making everything from buildings to manufacturing cars, infrastructure, just everything. You name it, copper is involved, and the price of copper we say it has a PhD in economics because it acts like it does, basically. And with this head and shoulders top breaking, and now notably looking like we're getting rejected off of this retest pretty strongly, it suggests to me that copper's clearly entering a bearish market here with very high probability. Next chart that caught my eye today, K-Web. Again, this is like internet companies of China. They're, as you probably very well know, they have a Amazon-like company called Alibaba, along with JD, Baidu, all these other things, like the Chinese version of Facebook, all these things they have. Highly undervalued equities compared to their American counterparts. I just wanted to bring up today's chart because it looks like we are hitting this previous trend line setup, forming this large little consolidation. So I expect to stay within this range before assumably breaking to the upside. It would make sense in terms of the fact that this market has been so undervalued for so long. And last chart of the day, MSOS. I think I brought it up on Friday as well. I'm buying more to maintain. I think it's a 1% allocation to this fund, just because, if I'm right and the fear of the Republican administration is kind of like at max, how could it get any worse? Of people fearing investing in the cannabis industry. I think it's gone overboard. I don't think this industry is going away, and as long as it doesn't completely vanish off the face of the planet, the upside potential in this fund to me looks enormous. A really cool opportunity. Granted, there is political risk here. Yes, we could have the laws change so that these companies literally have to liquidate and evaporate into nothing, and it could play out that way. I have doubts. I don't think the American conservative parties are as anti-cannabis as most people probably assume. That's what I'll say about that. And that's all for me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.